Hi, Vijay. Thank you so much for joining us here on Startup Central. We're recording this interview. I wanted to ask you, Digit getting a crucial approval of $84 million from the insurance regulator. Who wants to put money into your startup, and what's the plan?
Yeah, thank you, Nayanatara. I think we are, fortunate that at the early stage, I think the required funding is coming in, and the investors have shown a lot of confidence in the company, and along with the investors, I think the employees are also pretty concerned about the performance of the company. So I think this is something great, one can expect, as a startup company.
So tell me something. Who are the investors, and what are you going to be doing with all of the money once you get the $84 million?
Yeah, so I think, of course, we are a digital company and a lot of technology, I think investment is going on. The most important, requirement is the solvency, as stipulated by IRDA. We need to maintain certain solvency for growing the business. So that is the topmost requirement for any company. But the bigger question here is that how best we can utilize this capital. Can we bring in some efficiency in our operations? Can we bring sustainable business so that this capital utilization is appropriate and the shareholders are satisfied with the.
But tell me, what is it that Digit does, and how are you using technology to remove the inefficiencies? Why do you think you will be successful in penetrating insurance products?
Yeah, so one of the the initial thought process within the company was to look at the products which are large policies which are large in numbers, and where the claim settlement numbers are higher, so that people taste the services and the brand is built. So, we are continuing that, and to do that, I think the two most important requirements are there: the investment in the technology side and product innovation, communications. How do we communicate with the customer? How do we, popularize our products, among the customers? I think these are the three major requirements. And this cannot be done without investment and without proper backup of technology.
So how are you different from, let's say, Policy Bazaar? How are you different from, let's say, a Turtle Mint?
Yeah, Policy Bazaar, obviously there are aggregators or brokers actually who are the front end, who are the distribution actually, who are in the distribution channel. But the back end process is supported by insurance companies. That is where the problem is. So while the industry, for quite some time was, inward looking, looking at their convenience, but we started looking at the convenience of our partners. Sorry, as at our partners. The major differentiator, from other line of business, other type of business, from insurance, general insurance is the underwriting. You have to undertake the risk, and you have to be very careful while accepting the risk. So this is where the technology, use of technology become handy, as well as the complexities of it.
So then how are you different from Turtle Mint?
From Turtle Mint?
Yes.
Yes. So again, the Turtle Mint or Policy Bazaar, they are the brokers and aggregators. So they are at the front end actually. So for them, the simple input of the data, I think, is the core area for them, for their job. But at the back end, actually, the engine has to run. The pricing has to be driven through rating engines. The process has to be, underwriting process has to be simple. So those things are driven from the insurance side, which obviously is complex job, and only through technology and digitalization it is possible.
And with that, Vijay, I'll thank you so much for joining us here on ET Now.